The drumbeat getting much faster and much louder to abandon the dollar. IMF head says global currency change needed. Presses to move to the yuan as the world reserve currency. That's out of Reuters. We've got open announcements of this happening, but Bernanke says he's not too worried about it. What will it mean if they continue to devalue the dollar? It's at a 15-month low right now. Gold went up to $1,150 an ounce today. In futures, it's trading even higher with no end in sight. And now the mainstream media admits gold is going up because the dollar is being devalued, amongst other things. So top economist and journalist, Dr. Paul Craig Roberts, good to have you here.
Okay, Alex, good to be with you.
Okay, break it down for us, what we're facing, and talk to me like I'm a 6-year-old, 7-year-old. Break down. I mean, it's one thing to talk about this 3-4 years ago with you coming. Now to see it actually unfolding, it's amazing.
Yes, it is, isn't it? I think what made the whole world realize that the dollar was in its death throes is that both the budget deficit and the trade deficit are so large they cannot be closed by conventional means. And since there's no possibility of closing the budget or trade deficit, the rest of the world sees that to continue to rely on the dollar as reserve currency, which means, of course, it has to be a store of value. If it's not a store of value, you don't want, in your country running a central bank, you don't want your reserves of your nation stored in something that's not a store of value. And since the dollar is losing value, and since the rest of the world doesn't see any way to stop it from losing value because the trade deficit is now so wide, the budget deficit is so wide, they're all looking for an alternative before the collapse, because otherwise all of the international payments mechanism would be at risk. How would they settle their accounts to one another when the dollar goes belly up? So everyone is talking about it. They're trying to get attention. They're trying to figure out what to do. And I don't know what the solution will be. It may be that there won't be a reserve currency, that countries with strong currencies will settle with each other in their own currency. It may take some time for a new system to arise. John Maynard Keynes, at the end of World War II, he had a proposal which did not require a reserve currency. If you ran a surplus, you had to take offsetting actions to get rid of it. If you ran a deficit, you had to take offsetting actions. Otherwise, you were subject to fine. I don't know whether they'll bring something like that into play or not. But the dollar is certainly losing its value, despite the fact that most other countries are intervening to support the dollar because they don't want their currency to rise so much. The Swiss go in and buy a dollar. The Chinese buy a dollar. The Japanese buy a dollar. All of these countries are supporting the dollar by spending their own currencies to buy it, and it's still falling. So this tells you that it's a bad situation for the dollar. Now, one other thing, Alex. Here, in the short run, the dollar could go back up because the low interest rate in the United States means that the dollar is being used for the carry trade, like the Japanese yen was the last few years. You can borrow in the United States at such low rates, and then you take that money and you invest it in a higher yielding foreign asset. And so they're getting another bubble going. When that bubble bursts, everybody everybody has to unwind the carry trade, which means they have to demand dollars to pay back the dollar loans. So we could have a blip up in the dollar when this current stock market bubble bursts, and they have to unwind the carry trade. But the downward trend is in place, and there's really nothing to reverse it. If you think about it, the deficit this year is 4 times larger than last year. The deficit for fiscal year 2010 is also supposed to be 4 times larger than 2008. These are massive sums that have to be financed, and the budget deficit greatly exceeds the trade surpluses of our so-called trading partners. So even if they recycle all the dollars they earn from their trade surpluses, it still doesn't cover our budget deficit. And so the likelihood is that they'll have to print money, or print more money, which will tend to send the dollar yet lower. So there you have a very disturbing picture that doesn't seem to have any long-term solution.
And that's my next question. Again, just in layman's terms, there is a method to the madness. I mean, I know for you, an economist who used to run the Treasury Department, it's hard to reconcile people this destructive. But it's even come out that Goldman Sachs was telling people buy housing when they were actually secretly betting against it, and that they were doing this to destroy their competition and make giant profits. So for this inner group, they're making record profits and consolidating the economy. Main Street is dying. Real inflation is in check to some point. I want to ask you how long that will last, but real unemployment, most of the indexes show is above 20, not 10, like they're saying. And so how long can this delusional statement of jobless recovery continue as the real economy dies and as the bankers, the inner group, roll around in buckets of gold in palaces of wealth